Today's topic, Ask Me Anything, Volume 2. If you got the energy from the last time we did this, I also just realized I was wearing the same shirt. I promise you I'm recording this almost a month or so later. This shirt just came up in the lineup for Ask Me Anything. I might make it my Ask Me Anything shirt. So that way when you're going through the thumbnails, you'll see this beautiful shirt. You got to go, that's an Ask Me Anything in an episode. So just like last time, I'm going to go through some questions that we got. This is also a perfect time for me to plug. We love questions. Send us your questions, topics. You can either do that in the comments, which that's an easy spot to get to, but also if you go down to our show notes, we'll have a link in there that can also take you to our Google form page, and you can send a more personal question over our way. I think YouTube's pretty good at keeping things private, right? You can make up any username you want, but if your username's like your full name and you don't want that on paper, that's okay. Use the Google form and we'll use it that way. So we have, what do we got today? We got 1, 2, 3, we got 5. So I'm going to read the questions to start the episode. If you're joining us now and you're thinking, what are the questions? You don't want to wait for me to read all 5, scroll down to the notes. We'll have all 5 listed there, but here they are. First one we got. I've heard that it is not advisable to hire a financial advisor, predatory, etc. Can you comment on this? I can and I will, but just give me a sec. How does a college sports injury affect disability insurance? Obtaining insurance or even receiving a payout? That was number 2. Number 3, can you comment on umbrella insurance? Umbrella coverage, I should say. Do you recommend a certain amount of coverage based on total assets? What is the threshold amount to increase coverage? Love it. We'll get to that one. I've heard that to do a backdoor Roth IRA, the IRA has to be at 0. Can you clarify? That was number 4. Yes, I can, and I will. Number 5, last but not least, for the second episode of Ask Me Anything, what changes do I need to make to my disability insurance policy when I become an attending? I'm paying very little right now for minimal coverage. Those are the 5. We're going to get into them. We're going to start right away. As I've noted in our last few videos, starting in July, we kind of kicked out, I guess technically August is when these will go live. We kicked out that intro video because you don't come here for intro videos. You come here for the content. So let's get into it. As I noted the comments, but also one last plug before we get into this question. Don't forget to subscribe. The only way I can reach more fantastic physicians and other high income earners is because of you and that like button and subscribing and all that love. So thank you for the love. All right. So first up, my first one I'm excited to start with. Again, here's the first question. That it is not advisable to hire a financial advisor, predatory, etc. Can you comment on this? I can, and I'm not going to disagree with that comment. Our industry has done a really good job of making us feel like bad used car salesmen. And while it's gotten a little bit better, it still has a long way to go. So I can't sugarcoat this. I can't really hold your hand and say they're good or bad. I can't say, hey, this credential is great. I've always said the CFP is a very good standard, but there's also people with CFP credentials and they're out there slinging junk products. There's other people that have no credentials and they're some of the world's best financial advisors. There's CFAs, there's CPAs, and you name their credential, it does not mean that they're not going to be predatory. So my best advice here is do your research. The best way to find out is, my favorite thing is always ask them, how are they paid? That simple question should tell you a lot, right? If they say, well, here at WealthKill, we use a flat fee subscription model. So based on your income, your net worth, you're going to be anywhere from a couple $100 per month or maybe around $1,000 per month, but that's the only way we get paid. Or if they come in with, you don't pay us, don't worry, we're paid by the insurance company. That should put up a yellow flag, maybe a red flag. That's probably because they're getting paid commissions. They'll likely sell you a product, then never talk to you again. That's where you got to be careful. Now I say that and I'm being rude, where that person might sell you a product, but you may have needed that product, plug in disability insurance. And then after that, they're a very good financial advisor. Our big concern is when someone's usually getting paid a commission, they are only really pushed to do work in that moment, and you likely won't hear from them continuously. Or they'll say like, hey, we'll help you now, and then once you become an attending physician, we'll come back, right? That's not really what we could consider financial advice. So I do think it's very advisable to hire a financial advisor. It doesn't need to be a lifetime commitment. It could be a one-time commitment, a one-time plan. It could be hourly, but you need to be careful. I wish I didn't have to say that, but I do. So be careful, do your research. You can even do like FINRA broker check and learn more information about that individual if they're listed there. Google searches go a long way today. You can see their ratings on there on a Google search for a lot of these firms today. So not a bad question, a completely fair question, probably a question that needs to be asked more often, but just do your research, understand how they're getting paid. You'll be in a pretty good spot there. All right. Second, how does a college sports injury affect disability insurance? Obtaining insurance versus receiving a payout. This is one where having a good insurance broker, a good independent insurance broker can go a long way, because when you sit down with an independent insurance broker, we don't sell products. So this is not us, but we team up with very good independent insurance brokers, they will ask these questions, right? They'll say like, hey, that they're probably going to put an exclusion on that, right? And if you're hurt because of that, I'll use myself as an example. I had a weird back injury playing hockey when I was in high school, and there was an exclusion for a period of time. So if I would have had a disability event that was linked to my back, it would have been a really hard time to get payouts from that. Pretty much it was excluded. Now, if I lost my arm, right, that has nothing to do with my back, completely a normal claim there. So be careful here. If you're a physician watching this question and you're still in training, residents, fellows, look for something called a GSI, guaranteed standard issue policy, where as long as you weren't denied before, you can really walk into these policy with no health questions asked. Female physicians, some institutions still will allow you to get unisex rates, which is a huge savings there. So it can affect it. It depends on a lot of moving parts. Again, talking to a good independent insurance broker who they might even have conversations with an underwriter while not mention anything about you. That's what you want. You do not want someone that says, just fill out the application. I don't know. We'll see what the underwriter says and then we'll figure it out. Because if they deny you or they put an exclusion, let's just say they deny you, you might not ever be able to get that GSI policy that I just noted, or you're going to have to disclose that you were denied going forward for the rest of your life. So be careful there. Work with a good independent insurance broker. It might not be anything. It might be something you got to work around. So just be careful there. Number 3, one of my favorite insurance coverages, probably one of the main is one of the main piece of the insurance foundation that we put in play. But can you comment on umbrella coverage? Do you recommend a certain amount of coverage based on total assets? And what is the threshold to increase coverage? So a little bit of umbrella 101. Umbrella insurance is extra personal liability, right? Not professional, personal liability that sits over your car and home. So whether you have homeowners or renters and then over your vehicle. Again, physicians are our main group. So that's usually I'm talking to, but we also have a lot of other high income earners. A lot of attorneys are chiming in here, a lot of dentists, a lot of vets. So in this group, if you get into a car accident, any average attorney, heck, even below average attorney is going to do a Google search, find out that you're a pretty good professional here, making pretty good money. And they're going to, what I call my soccer flop, my favorite term, they roll around a lot more. They start yelling a lot louder, right? They're coming. The ambulance chaser is here. Get ready. So this umbrella insurance will add extra liability. The beauty of umbrella insurance is a pretty low cost. Now, it does vary by state. I always use myself as an example here. Back when we were in Philadelphia, back in Pennsylvania, about $1 million of coverage, only about $200 per year. Down in Florida, it started around $300, so a little bit higher, which makes sense. A little bit more iffy driving area down here. It's now almost close to $600. So we've only been down here for 2 years. So it pretty much doubled in a very short period of time. So it can be anywhere in that range. It also depends on your circumstances. If you audition for Fast and Furious, or if you have younger kids driving, sometimes they might not increase it or allow you to add it, or it might be a lot more expensive. So just kind of keep an eye on all those moving parts. But umbrella insurance, think of the umbrella, extra liability on the car and the home. Now, how much? We usually will say the minimum amount is always $1 million. You're trying to at least match your net worth. If you're watching this and you have student loans and you're like negative $300,000, still get $1 million. If you're watching this and you have a $500,000 net worth, get $1 million. Once you go through that threshold, so you go up to 1.1 million, round it up to 2 million, right? It's pretty low cost insurance. It's very well worth the cost of admission. It also does vary by state. Some states, not only in terms of the cost of it, but also how much asset protection is that state providing for you. But the best way in a one-to-many YouTube video is to explain it as, always cover your net worth should be your threshold there. And then once you go through that limit there, right, go and increase it. And if you have a market decline and you were at 1.1 million, but now you're at 800, don't nitpick this and go back down to $1 million, right? Just kind of always know that you're going to keep going up the scale there. If you have one of my favorite tips that we actually got this from one of our clients down here in Florida, if you have a child that is about to turn driving age, go get as much liability insurance, umbrella insurance as you can now, because there is a high probability that they won't allow you to add a policy or increase it when you have kids on your policy between the ages of 16 to 24. Inside information, my kids are not that old yet, but I got that from another client, one of my favorite tips that I use now. So umbrella, I think everyone should have this, whether you're watching this as a physician, firefighter, school teacher, engineer, dentist, vet, lawyer, any of you, you need to have umbrella insurance. It's just good liability. Everyone is so happy these days in this world. So umbrella is a good one. Number 4, I've heard that to do a backdoor Roth, your IRA has to be 0. Can you clarify? Yes. One of the most common mistakes in a backdoor Roth IRA is they have an IRA balance. Now, this could be a traditional IRA, could be a SEP IRA, could be a simple IRA. Simple IRA is not as popular. SEP IRAs are pretty popular. This is one of the accountant's favorites, right? You know, you had some 1099 income and just go open up that SEP IRA quick. Not a bad recommendation. I like it. I really do. The downside is it can blow up a good backdoor Roth IRA. So to do a backdoor Roth IRA, you got to make sure everything else is zeroed out. So you can't have a SEP IRA, can't have a simple IRA, can't have traditional IRA. If you're sitting there and you have a SEP IRA and you have 1099 income, remember, a solo K is a good recommendation. We have some good videos on that as well. Simple IRA, this can be a tough one. We got to do a little bit of math on it, but you can't do those. It introduces something called a pro rata issue here. But if you have everything else zeroed out, backdoor Roth IRA is simple. And remember, the $7,000 that you put into your IRA to then convert to your Roth IRA, that doesn't count, right? You want to try to zero that out. And even if your IRA gets like $3 of interest and you just notice it on like January 3rd, don't freak out. It didn't just blow everything up. You're okay. You'll then get that cleaned up later in the year, so you're okay there. So, but then I also realized I had this SEP IRA over here, and I must have missed that chapter in all your other videos. You know, what do we do, right? And then a little bit of spring cleaning and get it fixed up, work with a good accountant, but just be aware, all those IRAs, SEP, simple, traditional, all not need to be at zero, ideally at zero on 12/31. 12/31 is actually the main date there at the end of the year. All right, home stretch, last one. What changes do I need to make to my disability insurance policy when I become an attending physician? I'm paying very little right now with minimal coverage. Fantastic question. Oddly enough, in this set of videos that I'm recording today, we actually did another one, financial priorities for attending physicians. And this was our number one on our list is once you become an attending physician, you need to increase your disability insurance. So ideally, while you're in your training, residency, fellowship, you added this disability policy. Fingers crossed that it was a GSI, a guaranteed standard issue policy. You added in your guaranteed insurability. So now you're an attending physician, you can increase this. Now, a lot of times the insurance carriers don't even need to see that first paycheck, right? Now, if you're watching this and you just got your first paycheck, great. It's a little bit easier that way. But even earlier, once you have that signed contract, you can also provide that to them and then they'll help increase that policy. So first thing you want to do is get as much private disability as you can from one of the 5 main providers that is listed through a lot of our videos and YouTube posts. I won't go through it now, but there's only 5 providers out there that provide true ONOC disability physician coverage that we would approve of. So that's the first thing we want to do. A few other things I want you to keep in mind here. Get as much as you can. This policy is much stronger than your group plan. You want to have as much private as you can. The other thing, just based on that note of you saying I'm paying very little right now with minimal coverage. Minimal coverage doesn't surprise me. It's not uncommon to see when you get those policies in training, you know, usually they're around 5,000, maybe 6,000, maybe 7,000. Sometimes we'll see a little bit lower than that, but that's kind of the sweet spot, anywhere from 5 to 7,000. Paying very little right now makes me a little bit concerned that you have something where it's going to be an increasing premium. So you get this lower policy while you're lower premium while you're in training, but then it continues to go up, or graded premium, right? Be careful of that. Now that you're attending physician, get out of that, because the longer you're in this graded premium, the more expensive that policy becomes. So you want to transition to a level premium as soon as possible. So main things here is once you become an attending, get as much as you can, make sure it's a level premium going forward, right? That policy is one that you can build around. You can really, it's going to be a policy you have probably for the rest of your life. You know, depending on your specialty, your income, maybe you can add a little bit more and layer on later. Those are really the main 2 things you should be looking for with that disability policy now that you're an attending physician. Most importantly, congrats to you on becoming attending, but 2, also getting that policy in place while you were in training, because that is a big one to take care of, one that we shout from the rooftops, but realize not everyone hears it sometimes. So there you have it. 5 fantastic questions. Thank you to everyone that submitted those questions, whether it's through the comments or the Google form. I love this stuff. This is just like live improv. Clearly, I know the question coming in advance, so I can prepare for it, but still, I love these questions that are coming from you, the viewers. This is probably my favorite episodes to record here. This is only our second one. We already have enough questions for Ask Me Anything Volume 3 coming out next month as well. So continue to send us those questions. Please subscribe to the channel. Hit the little bell icon to get notifications every time we release it. I'll try to remember to wear this shirt only for the Ask Me Anything episodes. But as always, thanks for hanging out with me for the last, call it 15 minutes or so. Thanks for sharing those questions. I look forward to hitting more of these as we continue to go with these Ask Me Anythings. And as always, I will catch you on the next video.